Hello, everyone. Good morning or good afternoon, wherever you are. Welcome to our subscription billing suite webinar for D365 Finance and Operations. This product's been in the works for some time, so we're really excited to present it to you all today. This is Brian Morris speaking. I am a partner account manager here at Binary Stream, and I'm joined by my sales engineer, Neil McDonald. For today's webinar, we're budgeting 60 minutes, and just to minimize the background noise, we are having everyone in listen-only mode. However, we do want the session to be as interactive as possible. So if you do have any questions throughout, go ahead and log them. You can either use the chat interface or even better, the questions and answer panel, and we will review those and answer them during the session. The agenda for today is as follows. I'll start off with some background of what exactly is the subscription billing suite? What is it composed of? What does it do? Then we'll take a look at a sample scenario with not a real company, but someone that's an amalgamation of people that we have worked with in the past to give you a sense of what it actually does on a day-to-day basis and the value that it can provide. Then, of course, the most exciting part of today's session, we have a live demo. Neil McDonald's going to show the product in action. You can take a look at what it does. And finally, we'll answer those questions and answers and take a look at next steps. Okay, let's get into it. So what is the subscription billing suite? It can take many of the manual tasks that are associated with billing and RevRec and fully automate them. And at the heart of this is the billing schedule itself, where you can specify at the header the information that contains the metadata, as well as line item level details, which outline exactly what's to be billed and when. If any of these items are deferrable, we can also automatically generate a recognition schedule, no matter whether it's straight line or some other recognition method like event-based or milestone, that can automatically get created just based on the item itself. So it really takes out a lot of the manual processes and guesswork. Because we're developed inside the finance and operations code base, the learning curve, in my opinion, is minimal, which will reduce the complexity and risk that sometimes gets associated with deploying a new system, especially one that's as sensitive as billing, because really it's the lifeblood of your business. Finally, this product, it is designed with both GAAP and IFRS compliance in mind. So no matter where you are in the world, if you have to comply with ASC 606 standards or the IFRS 15 for the rest of the world, we can help you get into compliance. Obviously, no product can just wave a magic wand to do that. A lot of it's dependent upon internal processes. That being said, we provide the tools that allow you to do so. Okay, so to take a look at some of the actual components of Subscription Billing Suite, I've laid them out here. There's essentially three large components. We love our acronyms, specifically the four-letter ones. So ARC-B is the Advanced Recurring Contract Billing product. That's the one where you can specify exactly what is to be billed and when. It does come with an MRR report, which is crucial if you want to check the pulse of your company, analyze things like churn rate, top growing products, etc. And you can do things automatically with importing and exporting contracts. So if you, let's say, have an external system, maybe a CRM platform, and you want to bring in those contracts and not have the salespeople monkeying around with the financial data, very easy to accomplish. The Advanced Revenue Expense Deferrals component, or ARED, as mentioned at the outset, that's exactly what it does. It helps you with the revenue recognition, and it does work on the expense side. What it will do is eliminate the need to track all that stuff in a manual spreadsheet. I've seen some pretty gnarly ones with 20 or 30 tabs representing different lines of business, and it can easily cause a problem. If you do something in the incorrect company, then you could have a real problem on your hands when it comes to audit time if you have to justify why your deferral balance was this on a specific date. And Neil can actually show you some reports that we've created that make your life a lot easier if the auditor does come knocking. Finally, the last component there, MIRA, multi-element revenue allocation, that's really the module that allows you to achieve the 606 compliance. If you do have a scenario where you've bundled together different items on a contract for a customer, if you provide a discount, there are specific rules and regulations surrounding how that discount gets recorded. You can't necessarily just do a free item. You need to split that discount according to a certain metric across the other ones. We give you the tools to accomplish that in a few different ways, one that'll work for both yourselves and your auditor. Okay, so a couple of quick feature overviews here that show what we have compared to the F&O solution out of the box. You can read those for yourselves. This is the one for ARC-B. We've also got one here for ARED. For right now, let's take a look. As I said, we've been talking about some abstract concepts with billing and deferrals. Let's put a human face on it, and we'll talk about Holo Computing. They are a company out of Silicon Valley, and they're a fast-growing tech company who specializes in data storage and cloud computing. They have several different packages that their customers take, which provide different levels of service, including some smaller ones that have capped data usage, so their customers avoid any unexpected charges. They're currently using F&O, and they do love the program, but there's a few areas where it doesn't quite meet their needs. And specifically, I'm talking about things like metering. While some contracts are billed at a flat rate, there's others that include a certain amount of bandwidth, and still others have predefined tier levels where the cost per gigabyte of data decreases as the quantity is consumed. The way that these are generated right now, they have a separate provisioning system, but they have to rekey that into F&O. And if someone fat fingers it and enters the wrong rate, you could easily overbill and underbill your customer. Both of those are a problem. On the reporting side, the finance team has a monthly recurring revenue report that's barely functional. It takes a long time to produce, and it's also not that illuminating. Every time the CFO or sales director wants to see a different metric, it's a 3-week process to get a very small change made or to get a different view. What they want is something that's more automated and will also let them forecast future revenue streams to see things that haven't been billed yet, but they will be in the future. How can they best see the actuals and the projections in one view? And the third component is the deferred revenue itself. While some of the services that they have are billed monthly, they also have annual prepaid contracts, and those need to be deferred. Currently, this is happening in Excel, and it's a bit of a nightmare. Furthermore, they also have professional service contracts where, frankly, it can dwarf the monthly recurring revenue. They might have someone that's on a $2,000 a month package, but as part of the deployment, there can be $80K in services that are pre-billed. How do they recognize those milestones? Their auditor wants them to recognize 25% upon signing, another 50% at go live, and then a final 25% holdback for 60 days after go live. Right now, that's a lot of strings that are being tied around fingers, and there's no automated way of putting that in place. So that's essentially the scenario that a typical customer might be experiencing when they first come to us and see what we have to offer. Some people might call that a segue. What I would say is that's an introduction to Neil McDonald. He's going to go ahead and show you the product in action. Neil, I'm just going to make you the presenter.
Excellent. Okay, so here we are looking at Holo Computing's, that's hard to say 3 times fast, finance and operations system. So coming to that scenario that Brian was talking about, they've got some subscription billing, they've got some deferred, some non-deferred items. They may want to bill based on milestones. They may want to recognize based on milestones. They may even have some tiered pricing that they have to deal with in there as well. So the modules that we've created here at Binary Stream, there's actually 3 components. There's the advanced recurring contract billing, there's the advanced revenue expense deferrals, and then way down here we have the multi-element revenue allocation, which is our ASC 606 or IFRS 15 piece. What I'm going to do is jump into the advanced recurring contract billing and open up a billing schedule. So this is a schedule that I've created for this scenario where we're going to start by filling in the header information, then we're going to add those line items, and you'll see when we get to the line item level that we have the ability to do a lot of control, a lot of configuration at that line item level, so that even though we fill out the header, the individual lines have their own billing parameters, their own revenue recognition parameters based on the rules of the business. So starting in the upper corner here, we've got a billing schedule group. This just allows us, through the use of our setup area, to have a lot of information automatically default into the schedule. We can come back and look at that down the road if we need to. We have the schedule number. Of course, we can put a description. We're pulling a customer. This is an out-of-the-box F&O customer. F&O handles the creation of customers and accounts receivable and sales orders and so on very well. So we're simply building on top of what's already there and enhancing that functionality. Of course, when we select our customer, it brings in a lot of the customer's information. we have the ability to have an end user on this schedule as well. Right now, I don't have one filled in or a partner, but this is simply a matter of tracking in case, for example, if Hooli's customer, in this case it's Cave Wholesales, was actually reselling their product to somebody else, Huli may want to know who's actually using the product. So they drop in the end user there. That way, when that end user calls Huli and says, hey, we need help with that product we bought from you, if Huli didn't sell it to them, they don't know who they are. By having the end user in here, we can track back and find out who actually did sell it to them, which items are they actually using. Notice we have the billing frequency. We have one-time, daily, monthly, quarterly, semi-annual, or annual billing. This field combined with the next one, the billing interval, allows me to have unlimited flexibility really in billing. If I wanted to bill, for example, every 2 months, I could put monthly, billing interval 2, and it will bill every 2 months. You know, maybe I have a long-term contract where the customer is going to pay for 3 years up front. I could say annual, billing interval 3, and it will automatically bill every 3 years. So a lot of flexibility in how that is set up. Next, we have our contract start date and our contract end date. If it's a contract where, you know, maybe you're trying to do something to midterm, you're trying to co-term it with something else, you know, and it's a 16-month contract. Well, what's 16 months from now? Yeah, I can probably sit and figure it out and count on my fingers, or I could put in the start date, number of periods 16, and it will calculate the end date. Nothing fancy there, just a little convenience factor that we built in. We have the ability to have an auto renew function, yes or no. Do we want this to be evergreen billing? Again, this is at the header level, and then we can roll this down to the line level as well. If something is being put onto a schedule mid-period, do we want it to prorate that partial month? So for example, if we were to add an item today, and we're sitting today, I don't even know what day it is, the 19th of September, do we want to bill from the 19th to the end of September? And then if we align to the month, it will then bill from the 1st to the end of October, November, December, so on, but we get that partial prorate. Again, just some options there to make life a little more flexible when it comes to the billing. We'll talk about terminations later. We can terminate both at the header and at the invoice level, or the line level. So at this point, we're gonna start dropping items in. And again, these are out of the box F&O items. So we're simply gonna go to the item master, the release products. We're gonna pick an item and drop it on here. As we put it on, notice we have different item types. I'm gonna go right down to the very bottom here, just so I can, one that I haven't actually invoiced yet. We have a standard item. So what does that mean? A standard item, we simply treat that item how it would be treated. If binary stream didn't exist and you were to open up finance and operations and grab that item and drop it on a sales order, how would F&O treat it? That's what we're talking about. We have usage-based. So you may have some items where you want to track what the customer is actually using. We want to bill them for the amount that they've actually consumed. We may want to bill them even overage, and I'll show you an example of that momentarily. And then we have a milestone item where instead of billing it in January, February, March, April, you know, maybe the contract says, I'm going to bill you a certain percentage upon delivery. I'm going to bill you a certain percentage upon implementation and bill you the remainder when the training is done. So we can create various milestones and we can bill based on those milestones. I'm going to show examples of all of these as we're going through. We've got our start dates and our end dates. We do have the ability to do a revenue split where I can take a single item and split it across multiple other items in various formats as well. Notice we have in the deferred area, some of these items are deferred, some of them are not. We're going to come back to that. That's the tie to our advanced revenue expense deferrals. Let's come down here and look at the pricing method. You'll notice there's 4 different pricing methods here. Again, standard means how would F&O price this item if binary stream didn't exist? If we were to take this item, drop it on a sales order, how would it be priced? That's standard. It may look at the base sales price. It may go look at a trade agreement based on the volume, based on the dates, based on whatever parameters drive that trade agreement. That's what we're calling standard. If you were to choose flat, that allows you to key in, or through the use of the data entities, we can import in as we create the schedule any price we want. That really becomes important when you've got sales guys who can go out there and basically make the best deal they can make. So yeah, there may be a list price, but you know, one salesman might sell it for $100 over list, one might sell it for 100 under list, one might sell it for 50 over list, another one for 75. How do you build a price list and manage it when the sales guys can pretty much do what they want? We choose flat. That allows you to then open up this next field where we can key in or import in any number that we want. We have tiered pricing. I'm going to show you an example of that in a few moments, where we can do cumulative tiering, looking at a trade agreement and add up the values in each tier to get a final price. Or we have a flat tier, and again, I'll show you that in just a moment as well. So once we've got our items, we drop them on, we fill out the proper information to make sure they can bill properly. Again, we can modify the billing frequency at the line level. And basically what we're trying to do is replicate from a billing schedule perspective the contract that your sales guy has negotiated with the customer. So in this case, let's go through some of these items. There's this software line where the customer is automatically getting 50 licenses as part of this standard contract at $100 each. Notice the next line though is also the SaaS software, but it's a usage-based item. Here's the difference between the two. If I go into the billing detail of this standard item, it says I'm going to bill $50 a month every month. We can see the dates when it's going to bill, we can see the quantity that's going to be billed, and we can see the total amount. Notice here when we actually create the sales order or the invoice, we stamp it in here. So on this one record, I can see what I'm going to bill in the future. But as the life of this contract goes on, I also get an audit trail of exactly what I billed. So I can drill back in and I can see the distributions, I can see what's happened through this contract. Now, this is that standard item where the customer is getting those 50. The next line is a usage-based item. So what I want to do is track what this customer is using, and if they use more than 50, I want to bill them for that overage. If they use less than 50, well, that's included in the first line, the first 50, so I'm not going to bill. If we go into the advanced pricing options, we can come in here and tell the system that the first 50 are going to be free. Notice we can also do minimums or maximums in here as well. So if there's a committed amount, you tell the customer, the first 50 are free, but we'll never bill you for more than, 200. I could fill that in as well, and the customer will never be billed for more than 200. Now, if I go into the billing detail, we can look at some of the options here. So in this case, the customer used 75. Well, the first 50 are free, so they only get billed for the overage. In another month, maybe they only use 45, in which case, again, the first 50 are free, so all of them are free. A few months later, the customer uses 350. What happens there? The system knows the first 50 are free. The maximum that we will ever bill the customer is 200, and therefore the schedule goes back and looks at that setup from the advanced pricing, and it configures that properly. So we can have a certain quantity free to bill overages. We can have a minimum or maximum amount as well, and that's what we're showing here. So all of that is done because of the advanced pricing options. And again, those are configured at the line level. What I've configured for this line does not necessarily apply to any of the other lines. We could set them at each line if we wanted to. Let's go look at some of these other items. This is a professional services where I'm going to sell the customer 15 hours of professional services. But when are they going to be used? I might use some of them this month. I might not use any next month. I might use a few more the following month. I can't really lay that out on a calendar, kind of January, February, March, but I can bill them up front, but then recognize the revenue. Notice this is deferred item. And if I drill into the advanced deferrals button here, I'm setting this one up to be deferred. Based on our setup, it knows, yes, this is a deferred item. It knows how to defer it. We've got the long-term and the short-term accounts. So if this was a multi-year contract, accountants like to see their short-term and long-term liabilities and assets split out. So we would manage that automatically. We can defer the revenue. If there was a discount for this item, we can defer the discount. If this item happened to be something that sits on the shelf, a physical good, and I want to track the cost of goods and create the deferral there as well, we can do that also. In this case, it doesn't apply to this item. But in this case, I'm going to use an event-based percentage of completion milestone type of recognition. So as I hit that milestone, I could put in the date and the amount that was completed, and it would automatically pick it up. Now, this is just setting up what that schedule will look like. We'll come back and look at the actual deferral schedule in a few moments. But this is where it sets that up. The next item is a service contract. It's being sold annually. The accountants in the room know that if I sell you something today and you pay for it today, but I have an obligation to deliver the service over the next year, as in the case of this annual contract, I can't recognize all that revenue today. I would have to take that and defer it. Typically, it would be straight line over the life of the contract. If I highlight that item and drill into the advanced deferrals, we find in this case, we are using a straight line contract, and it's straight line over 1 year. So when I create the invoice, it will automatically create a schedule straight line for 12 months. We're gonna go look at that again in just a moment. The last piece, or a couple other pieces we want to look at here. This one is kind of a tricky one. Notice this is a milestone item. So this is a situation where the customer has bought this product, but they don't want me billing them for it until I achieve certain milestones. So in this case, I select it as a milestone item, and I pre-built a milestone allocation, but I have to apply it. So notice what's going to happen here. Between hardware and fee, of course, there's nothing there. But I'm going to come in and go to the milestone allocation, and I'm going to select that equipment delivery allocation that says the hardware, the delivery, will get billed 50%. You know, when I do the professional services, when I do the implementation, it's going to bill 30%. When I finish the training, it will bill the remaining 20%. I'm going to hit process, watch what happens to the schedule. There's my hardware item at its percentage. If I scroll across, I can see that it's got $4,000 or the 50%. This one is marked as the parent, and then I've got these three children, the hardware, the pro services, and the training, each at the correct amount as we go across. Some of them may be deferred, some of them may not, depending upon the type of product that we're offering here and whether or not we have to create those deferrals. So that's a milestone item. Notice there is no end date for those children items. We don't know when those are going to happen. Suppose I get a call, I just created this contract, I get a call from the delivery team that says we just delivered that hardware today. Well, at that point, I could come in and put in today's date. Now when I create my invoices for the month of September, this line will bill. These two lines, because there is no end date, will not bill because we don't know when it's going to happen. Down the road, eventually, we can put those dates in, and they can be manually inserted or they can be imported in. So I've got a couple other items here. I've got a fee. Here's that tiered item. Let's look at the tiered pricing. We've got the tiered pricing set up over here. The way that works is we go back and we look at the trade agreement and we do cumulative tiering. Let's look at an example. If you were to buy 400 items out of the box in finance and operations, I have a trade agreement that says from 1 to 100 items is $1.50, from 100 to 200 is $1.25, from 200 to infinity is $1 each. So out of the box, 400 items, it would skip these first two and say the 400 fits here at $1 each. 400 items is $400. What our tiered pricing module does is it actually does cumulative tiering, and it says the first 100 are $1.50 or $150. The next 100 are $1.25 or $125. After that, they're $1 each. So my 400 items is not $400, but in fact it's $475, which is what we're seeing here is being billed, and that gives me an average cost per unit of $1.19. So that's the tiered pricing. You can turn that on or off. If that was turned off and just standard pricing, then it would just work with the standard trade agreement the way the F&O would work with that out of the box. Then we have the flat tiered item. The flat tiered item simply says if you use a certain quantity within a threshold, so for example, I've got that says from 1 to 250 is a flat $250. So when I bill 100, it's $250. If I bill 200, it's $250. It doesn't matter whether I use 1%, 10%, or 99% of that tier, it's a flat price. My next tier says from 250 to 500 is a flat $450. So if I use 300, 400, 500, it's a flat $450 because it's a flat tier. Again, this is built on a trade agreement. It's just how we look at the trade agreement. We're not doing per unit pricing, we're doing pricing based on the entire tier. And then of course, my last tier says from 500 to 1,000 is a flat 750. So 800 or 1,000 is a flat 750. So that's the different pricing options we have available in the product. So that's going back to this area, the standard, which is out of the box, the flat lets you key in whatever you want, the tiered and the flat tiered, reading the trade agreements, but in a slightly different way than what F&O would normally do that. Now, I've got my contract built. I know what I'm selling to this customer. How do I get an invoice out to them? Very simply, I'm going to come up here to the periodic tasks, create sales orders, and let's say I wanted to bill for the month of, I'll do the month of October because I've already billed some of them for September, and I'm going to say I want the invoice to be dated for October the 1st, but I'm going to bill everything as of October 31st. By leaving the from date blank, it goes back and looks in the past and says, was something added since the last time I billed? If you bill your customers in advance, this is very important. Some of our customers, and in fact here at Binary Stream, we bill 90 days in advance to make sure there's a lot of time for the customer to ultimately turn that transaction around and get the invoice paid while they still have a service contract. Well, that means right now we're sitting in September. The billing team has already billed for October, November, and December. They're getting ready to bill January. Well, if you add a new service tomorrow, by leaving this open, the system will go back and check, and it will find that even though we're running our next invoices for January, it will find that there was something added in September, and it will try to do that catch-up billing. And it will say, hey, you missed these periods. You have the option of going back and rebilling each period. If those periods are already closed, you wouldn't want to do that and do a catch-up billing. Once I put my dates in here, I'm simply going to hit select. And based on the criteria that I've selected in here, and I filter this just to that schedule that we were looking at, but if I leave this out, it will find everything in my entire database that needs to be invoiced. When I click OK, it goes and brings those lines, and here are the items ready to be invoiced all the way across, and I can see those items, I can see the quantities, the dollar amounts, the customer, all of that information that needs to be billed. At this point, I'm simply going to hit either OK or batch, and it'll process the invoice. What is it going to do? We give you some options here. You may want to just create the sales order and stop there. Customers that have to do fulfillment, if there's any kind of pick, pack, ship process that has to happen, you would want to stop at a sales order, do that fulfillment, and then convert the sales order to an invoice. You may want to create the sales order and go to the posting form where you can make some changes to the posting form, or you may want to post and push straight through the invoice automatically. In that case, we would create the sales order. We would then convert the sales order to an invoice in a single step, simplifying the work that needs to be done. In either case, whichever one you do, I'm just going to hit cancel here because we don't want to watch invoices create. As I showed earlier, we come back to that billing schedule, and in behind that line item, we'll stamp in there. We were looking at that first one, and on the far side, we stamp in, there's the sales order that was created. When that sales order is converted to an invoice, we stamp the invoice number in here as well. So you always have that complete audit trail. Now, once you've started working with this customer, they may come back and say, you know, I want to cancel. Maybe it's the whole contract. Maybe it's just some items on the contract. Well, we have a few options there. We can come into the termination at the header level and simply terminate the schedule. We can adjust the schedule back to the termination date, which would be in here if we terminate. We can, and we're going to do the termination from the header here as well. We put in the termination date. Do we want to adjust the schedule or bill the remaining amount? You know, some customers, phone companies in the past were notorious for this, cell phone companies. You know, you can change cell phone carrier anytime you want, but you sign a contract, you still owe us the money till the end of the contract. In that case, they would bill the remaining. And you can put in reason codes. That is a required field. You can create reason codes and then put in the termination notes as well. If you were to terminate, you can also terminate with a refund as well here. So if there's something that you've pre-billed, that service contract, for example, you want to terminate it part way through, we can terminate it with the refund. If you terminate by mistake, terminated the wrong line or the wrong schedule, I can come in and I can remove the termination as well. Now, maybe the customer says, you know, I like all of the items except I don't want, you know, this tiered item anymore. Well, I can come down and I can terminate just that individual line as well. The same functionality exists, but I'm terminating a single line, not the entire contract. Again, I can remove the termination right there as well. If I want to just put it on hold, I can put it on hold for a while and I won't bill that until I remove the hold. And again, we can adjust the schedule, put some more information in there. So that's some of what we can do at the line level. We also have, and I'll have to switch schedules here, this revenue allocation. is for the ASC 842 functionality. Let me find you an example of that one, where we have inside of our multi-element revenue allocation module, the ability to create and track the standalone selling price. We can then take those items and we look at what is the contract value of those items. So what does the customer think they're paying for them? How does that compare to the contract's standalone selling price? And then it reallocates the revenue. So this piece of hardware that we're selling for $15,000 is going to get $16,048 of revenue attached to it. Where this becomes important, of course, is a difference in timing between when we're recognizing the revenue and when we're billing. So we have to make sure that we got the correct amount of revenue behind the correct item. So this service contract, for example, that's an annual item that has to be deferred. Even though I'm charging the customer $13,000, if I want to be ASC 606 compliant and recognize the correct amount of revenue, I can actually only recognize $11,328 of that. So that's a little deeper concept. Of those of you who aren't familiar with ASC 606 or IFRS 15, certainly feel free to reach out to us so we can give you more information on that. Now, when we created those invoices, there's something else that happens. In the advanced revenue expense deferrals module, some deferral schedules are created. So if we come into deferral schedules, we can come right down here and we can see, for example, I have an item that's set up in here with a standard monthly revenue recognition. This is one that's built using that 12-month schedule. And you can see there's what I'm going to recognize in January, February, March, April. A couple options here. Notice we've got $4.17 per period. It's a straight line. You know, for customers that don't want to use the straight line, as part of our setup, we can give you the ability to turn on or off this equal per period. And what that will do is adjust the revenue so that your months that have 31 days, like January, has more revenue than a month that has 30 days, like April, which again has more than February, which sometimes is 28, sometimes 29. So you can have per diem recognition, or you can have equal per period, entirely up to you. Another thing that we can do here, if we go back to, let's say, this hardware item, we may want to recognize the revenue on the hardware based on milestones. So again, these ones I've already run the invoices on them, but there's a certain percentage recognized on delivery, a certain amount on implementation, a certain amount on training. And again, this is a matter, normally these would not have dates in them. It would be a matter of coming in, modifying the schedule to import in or put in the dates. You know, if we actually hit this milestone today, it now has today's date on it. When I run my invoices for September, this item would be picked up. Of course, I haven't run for August yet as well. Again, on the deferral schedule, when we create the journal entry, we come across and mark it, yes, it's been recognized, and here's the account that it went to. And then we show, again, the date, the voucher, and the batch number that had happened. And in the top, we can see of that original $8,000, I've got unrecognized is 4,000 and recognized is 4,000 as well. So we're tracking that. And again, all of this ties back into a lot of our reports so that we can see exactly what happened and we can review that information at any time. So we've taken a very, very high level look at the advanced recurring contract billing. There are some setup options that we can look at in there. We won't spend a lot of time in here, but we can come in and set up some of the defaults. So, you know, what do I want for my default billing frequencies and renewal frequencies and so on. You know, if you have items that have a support component or a renewal component, we can set those up as well. So if I come in, I can set up initially my support and renewal levels. So for example, I've got a bronze, a gold, I've got a silver, I've got a whole bunch of different ones for some of the other customers I've been working with. And then I can say that certain items have a certain level of support or renewal. So for example, when I sell this software, it's got an item called support, an item called renewal, and I can have those associated with it. I can also attach, if I wanted to, a milestone template, and those things would happen automatically when I drop the item on an invoice. At the advanced revenue expense deferral side, again, there's some setup options here. This is probably the most important one, the defaults. When I come into the defaults, notice that you can use our module. Once you have purchased it, you can use it for various other deferrals as well. So you may be thinking today, this is subscription billing, it's revenue. But when you're talking to your folks on the payable side, they might tell you, we've got a spreadsheet full of prepaids that we have to manage as well. Well, once you have the module, it works on the revenue side for sales orders or free text invoices. It works with purchase orders or invoice journals on the accounts payable or the expense side of the house. Of course, we can create general journal deferrals as well. And we've recently added 4 of the different project fee types in here as well. So we're going to set up our revenue, and we're simply telling it, and we can do this by all items, by item groups, by an individual item. You know, what do we want to use for our deferral accounts, both the long term and the short term? What do we want to use if we have a discount? What do we want to use for the cost of goods? And when I sell certain items, so I can set up these different items, how do we want to recognize them? This is one where, for example, it's a 12 plus 24 schedule that simply says don't recognize any revenue for the first 12 months, then straight line it over the next 24. This is one I actually built for a customer that sold extended warranties. So if Huli's selling extended warranties to their customer, that extended warranty doesn't kick in until the factory warranty's done, but the customer's paying for it today. So I don't want to recognize any revenue, or I want to skip the first 12 months. Then it's a 2-year warranty, so I want to recognize the revenue over 2 years. So again, a lot of flexibility, but we're going to set up either straight line templates or event-based templates, and they work on various principles. Those event-based templates, if we come down and have a very quick look at that, rather than just being straight line, they're based on variable amounts per milestone, equal amounts per milestone, a percentage where you can set up different percentages per milestone, or based on percentage of completion. I see this one used a fair bit for customers that are kind of quasi-project businesses. They don't want to implement a full-blown project module, but they want the ability and the flexibility that percentage of completion gives them. So you set that up, and again, we simply apply that to each of those items under the deferral defaults, and then all of our logic kicks in automatically as these items are added either to a sales order, a purchase order, or one of our advanced recurring contract billing schedules. Now, we've been talking a lot about getting information into the database. We need to get the information back out many times as well as accountants. If we go to the advanced recurring contract billing, you'll notice here under inquiries and reports, there's a couple really quick hit inquiries here we can just look at. Billing lines, you know, what am I going to bill next month, next quarter? That's easy. From this point down, these are all SSRS reports. I'll show you these in just a moment. On the advanced revenue expense deferral side, again, we've got the deferral balance and a waterfall report. Rather than run all these reports, let me just very quickly flip to a PowerPoint. This is the MRR report. So this is the monthly recurring revenue report. So I can see my beginning, new sales, renewals, upgrades, downgrades, the churn, the ending MRR for each period that I've picked, and I see it in graph form and numeric form. If I click on one of these headers and I don't have that screenshot, it's going to split the data and show you schedule by schedule, which category is it sitting in and how many dollars, and then on the other side, category by category, which schedules, which customers are in there. The next report, this is a version of a Power BI report that we built as well, where by using Power BI, this is not part of the core product. I'll be very clear on that one. This would require a separate professional services contract to simply come in and build that data cube and make sure that the report's working to show the data that you need to show. But this is using Power BI. So again, I've got my MRR report, I've got the graph, I've got a subset of the data. If I click on any one of these numbers, it will rebuild this section to show me just what makes it up. So if I want to know, you know, what's this $3,470 churn, I can click there, it will rebuild and show me that $3,470. I can click which my top 5 customers, what does the MRR look like? What's the MRR for my top 5 items? So Power BI gives you a lot more flexibility to slice and dice the data. Really neat tool. Power BI is out of the box in F&O. This particular data cube, which is using our tables, is not. Again, it would require professional services engagement to make that happen. Out of the box, again, we have an upcoming contract renewal report where we can see schedule by schedule, we can see the customers, we can see the items, we can see when the end dates are. So when are they going to renew? And are they set to auto renew? And how many periods are they going to renew for, right? So in this case, I've got a monthly, it's gonna renew for 12 months. So it's gonna bill months 1 through 12. When it hits month 12, in this case it'd be 5/31/19, it will automatically add an additional 12 lines 13 through 24 to the schedule. So as long as the auto renew is turned on, I get evergreen billing. This will bill forever until I either turn auto renew off or I terminate that line. We have a total contract summary report, so I can just very quickly look, and from these, a lot of these I can drill into the schedule as well, but I can see the schedule, the customer, I can see how much have I invoiced already, what's the amount, what's the total contract value. A new contract sales report, so for a particular period of time, what have I got for new sales? What's my termination look like? I've got a termination detail report. I can see exactly when these lines are going to terminate. If the auto renew is not turned on, the lines will terminate. Well, which lines are they? Which customers are they? Which items are they? I can see all of that very, very quickly. Total contract revenue report, again, very similar to the ones that we've been looking at. Deferral balance summary report. This is probably one of my favorite reports as an accountant. I started 25 years ago where all other accountants did. You're sitting there doing reconciliations, and as Brian mentioned, the day comes when the auditor comes and taps you on the shoulder and says, you said that back on September 30th of 2018, there was $86,065.73 in all of your deferral accounts. Can you prove that? Well, if you don't have that reconciliation at hand, you may have to go recreate it. Maybe it wasn't done then. That was one of the things maybe you didn't reconcile to the penny. That could take days to go back into the past and try to figure out what did it look like a year ago. We can select the date, and in a matter of seconds, we will rebuild all our deferral schedules. Here we see in summary, in each of these different accounts, what was the original amount of those deferral schedules, how much was recognized as of that date, and what was left on the balance sheet. This is the summary version. The detailed version shows, again, the account, but it shows you the schedule all the way across the detail. You notice down below, I can see which customer, I can see the actual items, the GL accounts for the deferral and for the revenue recognition, of course, for the deferral accounts here. And it's showing me, again, the original amount, how much was recognized, what's left. Is it straight line? Is it event-based? All sorts of neat information there. We have the waterfall report that shows how much revenue is going to flow from the balance sheet to the P&L for each period. Of course, this works for the expense side of things as well. And then we have the declining balance report. So as I recognize my revenue each month, what will be left on the balance sheet? So this is just an example of some of the reporting that's available. These, again, are all SSRS reports. They are out of the box in the product. And again, you see those right here under the inquiries or under the inquiries and reports. So we've covered a lot of ground for Huli. We looked at creating a billing schedule for their customer. We looked at the different billing parameters at the individual line level. Some of those lines are deferred, some of them are not deferred. Some of them are deferred based on straight line recognition. Some of them are recognized based on hitting certain milestones. We had an item that was billed based on milestones as opposed to just a date on a calendar or periodic, monthly, and so on. Different billing frequencies, different ways of calculating the price. Once those invoices are created, which is a very simple process, the invoices are created in a batch. If there are deferral items, that automatically creates the deferral schedules, which we looked at as well. And if you're concerned about IFRS 15 or ASC 606, the multi-element revenue allocation module handles that. Now, I just want to point out that depending on your business, you may not need the entire subscription billing suite. If you do subscription billing, but you don't have any deferrals, everything is billed monthly, you never bill annually, no need to do deferrals. All you need is the advanced occurring contract module, so you can get just that one portion. Maybe you want the advanced revenue expense deferrals. All you want to do is you don't do recurring billing, but yet using a sales order, you need to create deferral transactions. So rather than using Excel, you could just simply add that advanced revenue expense deferrals module. And of course, you can then use the multi-element revenue allocation or not if you have to be concerned with 606 or IFRS 15. So these are three individual modules that can be purchased independently of each other or as an entire subscription billing suite. So Brian, I'm going to go back over to you to see if there are any questions that we should be answering here from the audience.
Thanks, Neil. Just to reiterate the question procedure, if anyone has one, you can use either the chat function or the Q&A panel. We'll be glad to take those. I'll just pause for a moment to see if any come in. When you were talking about that experience with the auditor tapping you on the shoulder, it sounded like you were speaking from firsthand experience, Neil. Did you get home late for dinner a few times when you were in public practice?
Depending upon what had to be reconciled, it could sometimes take many hours or even many days to reconcile an account back in the past, because you've got to try to figure out, what did that day a year ago look like?
Yeah, it's manual process. And, hey, at Binary Stream, we do more than make the software better. We bring families together. We will send you home for dinner time. So I don't see any that have come in. So let me make myself the presenter, and I will share the screen. We'll finish off the PowerPoint. Thanks, Neil. That was excellent. Okay, so for next steps, there we go. We do have the handouts that I mentioned earlier. They're still available through the navigation bar. So if you click on the handout section, you can download the white paper, the success story, the feature sheet. Those are all there for your convenience. For next steps, if you are a partner, go ahead and let us know. Get in touch with myself or Peyton or Justin, if they're your account managers. We'll be glad to set something up for your client. And if you are considering for use internally, if you're a potential customer that's using F&O, by all means, let us know. Our contact info is on screen there, sales@binarystream.com, or reach out to your partner. Chances are that they already are working with us, and we can certainly set up a discovery call, maybe a quick 15-20 minute session to see, is this a good fit, and we can take it from there. So that's essentially what we're presenting today. So I wanted to thank everyone for their time. On behalf of Neil McDonald and myself, I want to say have a great day, and thanks very much for attending. Take care now. Bye.
Okay.